if you're going in and just saying, well, I can increase rents by 15% in every single unit across this whole thing, or, I can go in and evict everybody and put in my $200,000, $300,000 into the deal and then release it up over the course of 2 months. And it's going to be great. I'm going to get full market value for all. Like, you're not thinking deeply enough in the penciling phase.
Welcome to The Conscious Investor. Let's get started. Conscious investors, welcome back. The guest I am featuring this week is so phenomenal. And I want to tell a little bit of story before I make that actually say, hey, you can say hi now. And that is that I actually got to meet Jeremy in person after 2 years of knowing him. We got to meet in person at Michael Blanc's Dealmaker Live in Dallas this last June. And it was so phenomenal because we're still a lot of us are still coming out post-pandemic and we're still meeting people for the first time in person. And sometimes there's that nervousness of how are they going to be? Are they going to be the same person that I'm anticipating them to be? Are they going to be a chameleon, something different, a different version? And it was like, man, meeting Jeremy in person was absolutely exceeded my expectations. And to be able to feature him once again on the Conscious Investor podcast, I think you were actually on Ask Me How I Know before the rebrand. And so I'm really excited to bring him back for a different twist on passive investing. We'll talk about his insurance company as well, but we're going to twist this around a bit and share so much information. You are going to love every moment of it because you get to eavesdrop on two friends talking about some of their favorite topics and sharing some great stories. So I could wax on, but remember, if you're getting any value from the podcast, please make sure that you are following in whatever capacity is, whatever platform you're on. Please make sure you are subscribed, you are following, and double dip in supporting the podcast by leaving an honest rating and review on the podcast episode. Let us know what you loved about it or challenge us. Say, hey, I'm not quite sure I agree with this. That's okay. Well, your honest feedback is what we value, and that's how we are able to develop content that will best serve you. Okay, for real now, though, I have to bring Jeremy on because I'm so grateful and excited to have you. Jeremy, welcome back to The Conscious Investor.
Julie, it's so great to be here. I have to say, I enjoyed meeting you in person so much as well. And watching you do what you do, which is really connect with people, connect other people. You're just magical in those environments and able to, bring women together in the breakfast. There were probably, 50 women hanging out for, 4 hours. It was like a long period of time. You all were just really coming together and enjoying each other's presence, meeting with other folks, connecting. You're just such a connector. And it's just such a cool thing to watch. And I think very few people have those skills at the level that you do. So it was great to get to meet you in person as well. And I'm so excited to just get to chat about conscious investing and the things that I'm up to and the connections that we have with each other.
That's so cool. Thank you. And I appreciate that. Connecting people is a superpower. And I feel that I do that a lot of times on social platforms, but my favorite place, my jam is real life, real people. I love going to events and just being able to play, in essence, a version of matchmaker. It's like the best.
Yeah. And you're so good at it. I go to these events and there's a passiveness to me, a nervousness to me, and a lack maybe of capacity to just walk up to strangers and connect with them. And watching people who do it really, really well is inspiring. And so it was just cool to see.
That's cool. Hey, key takeaway for everybody is there are no strangers. They're just future friends.
That's exactly right. And
So
they become future friends so quickly too. I mean, you think of the way that we've all met each other, and it's like you end up, whether it's a podcast conversation or a podcast in a room or a conversation in a room or just going to a meetup, however you engage with a new person, as soon as you find some connection, as soon as you realize you have kids that are the same age, or you're investing in the same markets, or you have, a strategy that aligns with the other person, or maybe you both just like to play football or have you connect on one or two things and then it's off and running. Like one of the neat things about humans is that our ability to connect is fascinating, right? And so much we see in social media and other places where we're really pushing each other away and we're getting tribal and we're finding the place where we're like, oh, it's all or nothing, but when you really sit down at a table with someone or you one-on-one talk with someone, it all changes and you really look to find those connections. And I think we need more of that and less of the other,
Oh, yeah, I agree with that. And the drive for the human drive for connection, it is one of our drives, just like we have our drive to, have our basic needs met. That's actually part of our basic needs. For some reason, people just kind of slice it into this own category. Like, oh, I just need a shelter, some food, and some clothes. No, actually, you need companionship. You need friends and connection.
Yeah, especially when you have less of other things, right? Like the more success, maybe this isn't true, but the more success you have, almost the fewer people you need. And, I think of like being a cave person in a cave with very little, like, what do you need? Well, I need someone to talk to. I need a connection because I don't have a TV. I don't have a golf course. I don't have a whatever. And connection means more deeper in the struggle. I haven't really sussed out that concept, but it just came to me.
I love it. But it's true. We do need that. In fact, I remember in a leadership class I was in middle or high school, one of those years, but I was always somehow involved in leadership. And in that we had to do a survival course of some sort. And one of the things that you had to have, we learned or were told or taught, whatever it was you need a newspaper. You have to remain connected somehow to the outside world, and the value of that, of having a newspaper or a book or something that you can still feel like you're connected. So super interesting.
I think that's true. And I think in commercial real estate, you see people say it's all about the team. It's all about the connections. It's all about the people. And that's because in some ways it's a team battle. Like you're in there, you just can't. When, commercial real estate purchasing, what you're doing is buying a business, right? You're buying a fully created business, unless you're building from scratch, which is kind of a different conversation. But you've got to have all of your team members in place. And I think that's the foundational connection with what we were just talking about in commercial real estate. It's that, you're in the trenches together. You're in a battle together. The battle is to run a profitable business. And you're picking that business up in the middle of the train moving. So in some ways, when you're buying a 200 unit apartment complex that's already been around for 20 years, you're hopping on a moving train. And the more people you have that are hopping on with you, the better you can take over the train and maybe run it down the track you want to. Yeah.
And maybe have it at a better speed or a better destination, something. It's always better. It was interesting. I love the way you're so eloquent. You have this great finesse about you always, Jeremy, where you're able to just reposition things, get back on track. We're talking about real estate. Yes, we are. So I'm going to take us back. That's the podcast host,
right? Yeah.
I know. Yeah. So speaking of podcasts, make sure you go and check out Jeremy's podcast. It's super informative. He has amazing guests on there all the time, and just a wonderful way as a host of drawing out just a lot of insight from guests. So that link will be in the show notes. So make sure you check it out and feast and binge on that. Before we popped in, hit record. I'll get my words here someday. Before we hit record, I was telling Jeremy about my son. I'm like, can you hear the lawnmower out there? And I was telling him the tale of the man-child, the lawnmower, and the hose. And you can go check that out in the Conscious Investor Facebook group. I'll have it posted there. But all that to say, that created an interesting conversation, and I learned something new about you. And I was totally like, what? I did not know you had a lawn care business way back when. And I'd love to go back down that path and talk about that past experience you had of multiple jobs.
Yeah, well, when you said man-child with a lawnmower and a hose, I pictured myself at 13 years old. I don't know if I was a man-child at that point, but, just really starting, like so many kids in the 80s and 90s, it was like, how can you make money? Well, I can use my family lawnmower and go mow a couple yards. And I really took that to the extreme from the age of 13 till, 9 years ago when I started Shine Insurance, which would have been the age of 36. And I used my family mower. Then I bought a commercial mower. Even before I had my driver's license, I would ride around on one of those sulkies, the thing you stand on behind those big old mowers.
Those are cool.
Yeah, neighborhood to neighborhood, like riding my mower down the street because I didn't have a driver's license yet, and making money doing that, growing that business, buying a nicer mower, buying a truck when I had my driver's license and a trailer. And even into my adult life, as I became an elementary school teacher for 13 years, I would drive my mowing truck up to school in the morning with the trailer on the back and all the commercial mowers and back it in right next to all the school buses, and then go in, teach kids all day long, go to meetings after school. And then around 4 o'clock or whenever I got done, go out to that truck and just mow stripes until the sun went down. And so I really, something about that, it really taught me a lot about entrepreneurship. It taught me a lot about keeping my head above water when you only make $27,000 a year as a teacher, and, just how business works. So I feel like running a business for that long really helped me to start the business that I own now.
I was like, oh my goodness, because, my background, 13 years in elementary education as well. And I'm thinking, man, every teacher has a side hustle and they're already doing an exhausting job that's so critical. And then most teachers have a side hustle. So if you know a teacher, make sure that you just shower them with love because they're not compensated well. And most people, even if they don't bring it up, probably have some little side hustle going on. But now you have a thriving, extraordinary, insurance company, and you're a passive investor. So you went from, I'm a hustler, I'm a 13-year-old hustler, and I get lawns mowed and get her done. I grew a business and I'm an educator and have a business, to now I run this robust company with multiple tentacles to it. And I am a passive investor. Some people would say that's a complete change altogether, to be in want and having to be driven to, stay above board to, all right, now I create jobs for other people and I invest passively. Tell us about your experience with this and passive investing and that kind of change in life.
Yeah, it was a really conscious decision, right? And kind of a hard one. So I didn't know what was going to happen over the course of the next, what's now been 9 years when I started Shine. I knew that my wife, who I'd only been married to for a couple of years, was a third generation insurance agent. She knew insurance. She was ready to move on from her dad's agency. He had sold it to a big conglomerate. And I was ready to do something different than teaching. I was really ready to find what I now understand to be a path towards financial freedom. Right. I was like, I cannot live making $27,000 a year, running up credit card debt just because there wasn't enough money to make it all happen. And so it was a conscious decision to leave something that really had a lot of soulful power, right? You've been a teacher before. Mm-hmm. You understand how appreciated you really are, right? And people drop their kids off. You spend more time with their kids than they do in a lot of ways. Mm-hmm. And there's just really a trust and respect in what you're doing there. And I left that. And the biggest reason I did that is because I wanted financial freedom. And I was willing to give up that and turn towards something else. And so when I did that, it was like, okay, well, how can I keep the educator? And I love being a teacher. I love educating. I love, doing all that work. And so what we really tried to do was say, how can we change the way people feel about insurance and really teach people the value of risk management, of figuring out how to protect when we play sports, it's really clear, right? We've got offense. That's how we get our points. And then we've got defense. That's how we stop other people from getting points. The same thing applies here, right? As commercial real estate investors, we have offense, picking up new tenants, increasing rents, if that makes sense, making sure that our tenant base is we create a community for people and really build conscious, environments in our space. All those things are often offense with our financial scenario, but we want to make sure sure that ultimately we don't lose the money that we've invested, right? That's the defense. And that's the role I play. And so I get to be kind of the defense coach for real estate investors. And as I started to understand that, one, how to educate people about insurance and about risk management, and two, what financial freedom really means and what that goal could feel like in my life, it was like, okay, this is exactly what I wanted to do. And just building a business is really valuable as well. I mean, I've basically achieved my financial freedom goals in 9 years, and there's a lot still to go, but a lot of those foundational goals have been achieved. And so that's the transition, that's the focus. And then it's how do you take the thing you're doing, serving the commercial real estate community, and really do it at its highest level. And that's, every day's attempt for me right now.
I think that it's a slam dunk every day for you, but that's just, I'm a spectator. I'm not sweating behind the scenes, at Shine Insurance, like doing the reps. So I know that to do things with any level of excellence, the way you do and Shine does, it requires and demands a lot of effort on the backside. So I love that a lot of times what I have found is that in the real estate community, as people enter into this community, they feel, well, if I'm a successful real estate investor, I have to only be a real estate investor and I have to quit my job and I'm only an investor. In fact, I spoke with a young man last week. He hopped onto an investor call. He's getting married this October, so adorable. They're this young, they're just at that beginning stages of life and investing back where we were way back when. It's like, oh gosh, right. You guys are so adorable. But in this conversation, I was able to ask him specific questions and guide him that if he takes that path, he and his wife, they're going to be set. I mean, if we had that knowledge and that opportunity presented to us, it's going to be set. It's not going to serve my company for a little bit of time, but it's going to set them up in the trajectory. And it's so satisfying. But he had that same concept. I said, he's like, I love my job, but I feel like I need to quit my job. So I love that you're investing passively. You have this amazing company. So did you ever have to wrestle with that? Oh, I have to in order to be a successful investor, I need to sell off my company. Did you ever?
No, I think that's a good question. And I think I hear that from a lot of service providers to the industries, right? And there's a trajectory I see over and over again. Someone comes in as a service provider and then they're like, I'm an active investor and a service provider. And at some point, the service provider side sort of starts to fall and fail. And maybe that's not happening as well as it was before. And then at some point, they're just an investor. And that's not always the trajectory, but I do feel like I've seen that quite a few times. I'm from the perspective, I have no interest in being an active commercial real estate investor. I am a service provider to this industry through and through, but I'm also a passive investor as well. So my philosophy on building financial freedom is really around active income and passive income. You have to have both no matter how you structure it. And so my active income comes from my insurance agency. Now, that is an investment in and of itself that is very similar to commercial real estate. It has a value. In fact, the value of my agency right now is somewhere around $2 million. And I have no debt on that asset. So it's essentially a $2 million piece of commercial real estate with no debt on the asset. So it's creating cash flow based on insurance policies and all that kind of stuff. So I have the cash flow associated with that. And I have the investment of the money that's sitting there. So if I turned around and sold, to finish out the sort of financial freedom piece, right? I have about $6,000 of expenses a month, $6K a month, about $70,000 would cover my expenses. I always feel like financial freedom is when your passive income or income besides your active income would cover your expenses. So $6K a year is what I have there. If I were to sell the agency, which I have no interest in doing for a long, long time, But that asset is sitting there, sell it for $2 million. You make 10% off that. You make 5% off that. That's $100,000 a year. And so I can look at that scenario and say, I guess I added a third thing, Julie. So you need active income, you need passive income, and then you need assets that are potentially sitting there to create one or the other of the two. And so when I look at my financial scenario, I say, well, I have this $2 million asset. So if I wanted to, I could create a completely passive income and cover my life. That means I have financial freedom. But I don't want to release that asset right now because I know it's more valuable to me than what it's worth to sell to someone else over the course of the next 10, 20 plus years. I don't think I answered your question at all. I think I went on like tangent, Jeremy.
Oh, I love it though. This is like robust information.
Yeah, I just wanted to share like how, again, why do you leave teaching? Why do you leave something that you're passionate about, that you love, that you know you're good at, and go somewhere else? Well, especially go to being an insurance agent, sort of one of the least loved humans out there. I mean, insurance agents get used in songs and TV as like the worst example of a human, right? Maybe tax collectors are a little below that. I don't know. But anyway. Car salesman, right? Like that we are essentially the metaphor for a sleazy person. And so how do you go from being a teacher, totally one end to the other? Well, you better have a real reason. And besides creating financial freedom for my family, obviously we have other focuses when it comes to donating and being a part of the community in a bigger way. But foundationally, it's creating financial freedom. And so now we've done that. So then where does it go from there? And I think that I remember what your question was. It was, do I ever want to be an active investor? And so because of that philosophy I just described, I have no interest, maybe I'll join a JV team at some time or join a GP team and, be a capital raiser. I'm not a great connector though. You know this, Julie.
That is so not true. That's not true. That's what my husband says also. And I'm like, oh, you quote introverts actually really know how to connect people. Yeah. So maybe I'll join a team at some point. But for right now, I'm just really loving the system that we have and structure that we have. I know I'm adding value to investors' journeys. And I know that the financial goals that I'm looking towards are happening. And so that feels perfect. I love it. And, it's so interesting that just as you mentioned, so many service providers, they're service providers and active investors, and then they slowly fade into full-time active investors. And I also know people that are active investors who have a plan in place where it's like, I will have my company for X amount of years. And because I'm only doing this because I want to be a passive investor. And that's my end goal is full time freedom, passive income and things like that. So I appreciate, I'm in a similar position to you where I love what I do. I'm here. I have 3 Keys Investments specifically just to support, educate, and help people enter into the investment community through passive investments. Right. And so to me, it's like, the goal is people, not dollars, not units, not cents. Like, yes, there is a dollars, yes, there are those, but the end goal for me is like, no, how many people have I supported in their journey? That's my mission, which is very different. I'm like, oh, I'll be doing this for a while, but I love it. So
it's so good. And I wanted to ask you this because I think we talk so much about numbers, kind of like I just did, really like laying out numbers and acquisition. And like, we don't talk as much about the communities we're supporting, the tenant base that we're helping to have homes that make a lot of sense. The fact that if we do it right, we're lifting up potentially a neighborhood, a block, things like that. There's so many. When I see the name of your podcast, it reminds me how many slumlords there are out there, how many people that can't do anything but think about the numbers, that don't care about maintenance records or whether they're actually taking care of someone or whether, they're evicting everybody from an entire complex. I mean, I guess maybe there's times there's this place. So there's slumlords. And then there are people who really, truly are 100% conscientious investors. It's like, I'm going to do this full on. And then there's everybody in between. And I wonder from your perspective, like, how do those two things come together in a way that really makes for healthy investing?
Like, how do you create the winning investment package where, as I always say, and anyone, if you're on the email list and getting my newsletter, you will usually hear me say, the residents win. That, well, I always start the investors because they are who allow us to even execute and purchase anything at all. So, the passive investors win, then the residents win. And when we have, healthy, happy residents, we're supporting a community in a more vibrant way. So honestly, it's any opportunity, Jeremy, where I see any opportunity where I can place investment capital, like all my investors, if they can be invested in anything, I already know how I operate and the types of teams that I align with. And so I already know we're going to create something that will be supportive of the residents and the community. Yeah. And by nature of that, if it's a Class A luxury dwelling, or if it's a Class C light or heavy value add, either way, we're raising up the community, because even our Class A people, they need a place to live. And so I used to be geared towards, okay, well, I really want to go into some of those fringe neighborhoods, shift that block over and be a little more strategic like that. That used to be more of my passion. And now it's moved to, I really do see equality between all resident classes, which is that took a little interesting shift for me.
Yeah. Well, because I think there's struggles in all levels of how to make sure that you provide the home that the individuals who are a part of that can enjoy, and a financial investment that the folks who provided the capital in the first place will benefit from. Mm-hmm. And folks like you and other investors that I see around are doing it really, really well. It's absolutely 1,000% possible. But then I see people who are trying to do it too. I'll give you an example. So have a client who recently called in a claim, and it was someone broke into one of the units and decided to cut the water lines in the unit. So it's clearly because person was mad at the owner and just it was like a vengeance crime, or I don't know, whatever. You know what I'm saying? And so I got to talking with the person a little bit more, and their plan was essentially to purchase a property, come in, evict everybody, and get it down to zero, and then renovate, do everything, and lease back up. Now you hear philosophy, you hear that all the time. It doesn't necessarily sound so bad, but then you think about being a tenant, and it's like, wow, you just came in and wiped out everything that was the environment that I was living in. And so, what's going to happen? Well, people are mad. They break in and they cut your lines. Now you've got $30,000, $40,000 of damage in your building to deal with. I don't know what's right or what's wrong, but that particular scenario just stuck out to me as like, wow, that's really interesting as to like how, as real estate investors, what our ethics are. Like, was that unethical of them? Was it not? What were all the things playing in that made that particular deal what it was?
That's really interesting. I was just reviewing a rent roll, and the rents, this is on a kind of my quote backyard, which means an hour and a half away.
Right. So, nothing super close, right?
Right. Nothing super close. But I was reviewing the rent roll, and it's like the rents were consistent. And then there was this one rent that was 60% below everyone else's rent. Right. And that's one of those where you kind of like raise your eyebrow and go, what's
going on?
And a lot of times it's like, well, I think a lot of investors would be like, well, that's the first one to go. Like, we'll just bump up. And honestly, that's like one of my knee-jerk mental responses. Okay, well, something's got to be done here if this is going to pencil out. But then there's the next question, right? We can have our initial human knee-jerk reaction, but then what is the next question? The next question is, what's the story behind that? Yeah. What's going on here? Who's living here? Let's learn more about this. Is there a way where we can execute and still serve this resident? We just don't know. So I think it's just good to get a lot of the information, because if we're going to be giving money, say, to charity of some sort, to support, which I think you and I both do. It's like, okay, well, if I'm going to go and support that, but I have an immediate opportunity to support somebody's housing need. They're already here, and here's the situation. That might be worthwhile.
Well, yeah. And I mean, done right, it becomes maybe scholarship, a rent program, right? Where you have, obviously there's government-based rent programs, which are a different conversation, but, you could in yourself and on your own say, I'm going to make sure that I have 50% rent on 3 or 4 units based on a criteria that works for me to make sure that I'm providing housing for XYZ person in this community. You're absolutely right. That's charity on the front end, and makes total sense as long as it all pencils and continues to work,
as long as it pencils out. Yes. So you're asking like how, it's wild. It's wild. I could tell we could both share so many stories on this front of the things, because as podcasters and people who are very active in the industry, we know a lot of things, and it's like, there are lots of stories that could be told right now, and we'll just keep going.
Yeah. Well, I guess the foundational thing is as your listeners are penciling deals, this is the time to have these conversations with yourself, right? If you're going in and just saying, well, I can increase rents by 15% in every single unit across this whole thing, or, I can go in and evict everybody and put in my $200,000, $300,000 into the deal and then release it up over the course of 2 months, and it's going to be great. I'm going to get full market value for all. You're not thinking deeply enough in the penciling phase, and I see that a lot. It's so fascinating. I work with so many investors, right? Because I'm not an investor, an active investor, in a lot of ways, I just get to see a lot of repetition of investors, and the successful ones, the folks who have 1,000, 2,000, 3,000 doors and are really doing it in a way that is thoughtful at the highest level. They think about this stuff from the very beginning. Their questions to their underwriters are around topics like we're talking about right now. They're digging deep into the property and the structure and the financials and everything, but it's also, what is the community like? How can we make the community better? How can we serve this community in a way that doesn't break it down, but builds it up? Now, if there's major drug problems or something like that at a given property, then you've got to say, okay, well, am I interested in digging into what is a very high risk property at that point? I personally, and again, I'm not an active investor, so it's not even fair for me to say, but that probably wouldn't be something that I felt like I could take on, because I just don't know how. I'm not the person to do that, But I think that the successful investors I see, again, think about this from a business mentality at the highest level and the whole picture of everything they're doing.
A good business is always, and the reason that your business and in my business and other businesses flourish isn't because it's just a good business providing dollars and cents. It's conscious, and it is intentional, and it's that human side of it as well, which is so critical. Going back to connection, full circle on that, humans long for connection. And when we know that our investments are doing something more than just dollars and cents, there's a deeper connection to that. And it's
absolutely
extraordinary opportunity.
And it helps you wake up in the morning. There are days when I'm like, insurance. It's just real. That's a reality. Yeah. And then you've got to come back to, well, here's the value I'm providing. Here's the journey I'm on. Here's the effect it's having on my family. Here's the effect it's having on my community. Here's the effect it's having on the team members that I've brought on and am paying well and are creating a job that has work-life balance. And, I think that all those things, I'm not great at all this stuff, but I think that, that is what great people do, is just see the balance all around and do that. You just read recently, Who Not How, putting the people around you. That if everyone around you is smarter than you, you're doing something right,
Yeah, it gets daunting sometimes. I'm like always the dullest tool in the shed. I'm just around such amazing people. I'm grateful. So, speaking of who's, as you're
evaluating, you are not the dullest tool in the shed. You're the connector. You're the connector along with a lot of other things. But you can go ahead with your question. I wasn't going to let that go.
As you are looking at, who's, right? And you are exposed, you have access to more behind the scenes information on active investors. You're you're really akin to a doctor, right? People come to you because one, we have to have insurance, and two, we have a problem that just took place and we need to reconcile this with our insurance and get the payout. So you get to see people in the worst moment possible for a lot of them, right? Or what feels it's an emotional moment. And so
100%.
it's frustrating. There are lots of concerns. How's this going to affect our investors and the residents? Well, right. You're kind of getting that thrown at you on a day in, day out basis. So you get to see the true colors of active investors, right? Not the marketing, not the LinkedIn fancy posts and we just closed another one. Like you get to see
those things are different. No.
You know what? I think Kent Ritter and I are going to record a little friendly rant on this soon.
Yeah.
Just for funsies. We should rope you into it. It'll just be fun.
Absolutely.
All this to say, you see people's real character, because when something's on fire, that's when someone's true character is being exposed. So with that said, I feel like you would have a special insight into how to choose an active investing group to participate with.
Yeah, I really do. I think that as I invest, it's kind of easy for me in some ways because I'm underwriting deals as the insurance. When I have to find the insurance for a property, I'm underwriting the deal. I'm also underwriting the investor. I'm also pitching that investor to the insurance companies because, believe it or not, especially at the highest levels, underwriters want to hear the story. They want to know that investor has risk management systems in place, that they have a strategy as a whole, that they have a business plan, that they've followed through with that business plan before and been successful, and that is how you get better insurance prices. But I think when I'm looking at investors, I'm very much looking at their character. All the deals I've invested in, I really haven't underwritten beyond what I had to do for insurance as far as the numbers and things of that nature. Not that I'm not looking at them. That's not entirely the case, but I am underwriting the investor. I'm underwriting the people who are going to be involved and the belief that their business plan has been successful before and is going to be successful in the future. So the deals, my number one piece of advice to anyone who's passive investing is underwrite the team more than the deal, right? That's where you start. And that's talking with them about have they had success before. And if the capital raiser is someone who is newer to the deal, or if anyone's newer to the deal, that's not necessarily a deal killer. But who else is on the team that's going to take up the slack of someone who's newer in what they're doing? If someone's a new capital raiser who's listening, definitely put yourself in connection with people who have more experience, and then talk to the folks who are investing about those people who have more experience in their journey. So I just underwrite people. That's my best piece of advice, is just look at those people, look at their story, look at their journey, look at their mission. And if that all aligns with you, then maybe it's a good deal for you to invest in. I'm not investing in 3X deals, or anything like that. I almost invested in one. It's a very interesting story. It didn't end up closing, but I think it would have been great or awful. I'm not sure, but it would have been something. But you're looking for the people who are doing the deal. And in that example, completely vacant 200 unit apartment complex in Montgomery, Alabama, was going to be purchased for, the investors prior had just completely run it into the ground, taken all the capital out. All the apartment complexes around that particular one were in pretty good shape. We're very nicely cash flowing. Montgomery, Alabama is a capital, so a lot of the things about the market were nice. But you got a totally vacant apartment complex. You're not going to get any money back for the first at least year, right? And then you go from there. So I thought about investing in that one because I trusted the people, because they'd done it before. They'd done that heavy of a lift before. They'd had success with it. But I also looked at the market. I just said to you, I knew you, right? I knew the market. It felt good. So I think that's my advice is study the people. And I get kind of an advantage there because I get to study them from the way they engage with me as a service provider before I study them as a passive investor.
Yeah. You basically get served potential people to invest with on a day in, day out basis, which is super cool. So how would you suggest, I have someone's listening and their aim is to be a passive investor and they're trying to figure out, well, that's really great for you, Jeremy. Silver platter, you have a silver spoon, basically. So how am I going to go about finding a passive investor? What tips would you have?
I think it really is there's a lot of word of mouth and referral, right? If you've never talked to someone who has invested with that team before, you're doing yourself a disservice, because at that point you're just listening to the social media, the workshops that they're doing, the webinars or whatnot. I think it is good to go to those webinars. It is good to hear their story. It's good to learn how to underwrite. Read someone like Brian Burke or Hunter Thompson's book about passively investing in deals. Learn, I think there's 3 things that successful investing has to have: education, experience, and entourage, the 3 E's, right? So you got to start with educating yourself. Get out there and, read. I think when I was getting started, I read Hunter Thompson's book on passive. I can't think of the name of it right now, but it's written to active investors wanting to invest in multifamily. But I absorbed it as a passive investor, like, oh my gosh, if you can understand it from that level, then you're going to have a leg up as far as how you can engage with active investors and figure out which deal is good. So get that education, read those books, listen to those podcasts, come to understand things. And then you got to get some experience, right? You have a couple of deals, you see what goes well. I have a friend who's, done, I think 10, 15 full cycle passive deals. At that point, he's figuring out, do I like to invest in funds? Do I like to invest in specific deals? Do I like to invest in multifamily, or should I invest in an ATM? Right? We start getting into different asset classes and all these kinds of things. And then the last E is entourage. And that's what I started with, right? Who can you talk to? Who's done this before? How can you get into a forum of people who are not active investors? They're all passive investors, and they're just talking about the deals that they've been in. They're not marketing to you. They're just telling you their experience. So education, experience, entourage, that's how you get a leg up in making decisions about passive investing.
I love that. That's really good advice. That's insightful. Is interesting. I was at the Best Ever conference, which literally is one of the best ever conferences. Joe Fairless says, check it out. I don't have a link or anything. Maybe I will at some point, but next year, 2023, it's going to be in Salt Lake City. So make sure y'all check that out. It's a great conference. And I remember sitting at lunch one day, or actually I was in the buffet line, getting lunch. And I really appreciated how they had a catered lunch every day of the conference for every attendee. It wasn't an add-on or anything like that. So we were all breaking bread together. I mean, hundreds of people. And I'm in line, and it turns out that this person in front of me is, a passive investor. That is all they do. And they were there at the conference. And naturally, that's going to be attractive to active investors. You're a passive investor. What do you? And so in our conversation, as we're going through this long buffet line, I realized wow, what I offer might actually be beneficial. The right asset class, the right this, the right that. Hey, do you mind if I join you for lunch? So I sit down, and some other active investors are sitting there who I'm acquainted with. And we ended up just asking them, can we just ask you questions from a passive investor side? So it's almost the reverse of what you're saying. You're saying it's because there's value to that. There's value to being, not everyone just focuses on that one, I'm only investing passively. And so when you can be around people with that type of mindset, it's different than the I'm active and I'm passive mentality.
I love it. And anybody who studies marketing at all knows that the number one way to create a solid marketing strategy is to ask your ideal client over and over and over and over again what it is that they want, and then give it to them. And so that's what you were doing. Maybe that would work out to be an actual connection, but more than anything, it's what do passive investors want? What do you really need? How can I provide that to you? Or how can I attract more people who need what I have to offer, right? And repel the people who don't. If you don't want to invest in multifamily, they're probably not the right investor for what you're doing, Julie. And then, so I don't want to attract a bunch of people who are interested in self-storage. That's not doing me any good, right?
Yep.
And so I think that's key, is just asking the people, no matter what business you're in, no matter what part of that business you're in, everybody has some version of marketing. And the best way to do that is to know who your ideal client is, know them really well, and then ask them what they want, because it's usually not what you think it is.
Oh my, it really usually isn't. It really isn't. So, okay. as we are going to have to wrap up, I just looked at the time and I'm like, oh man. But I would love to hear your perspective. And in fact, today I just released a new blog post on the topic of, is it blood in the streets or is it just fear? And so, I see a lot of people right now within the investment community in general. Yeah, I see a lot of people kind of hitting pause, stepping over to the sidelines a little bit. A lot of passive investors right now are a little nervous, and the chatter is a lot of passive investors are also stepping back. And so I was just curious, what your perspective is. And it is, your opinion, your perspective on timing of a market. And if your perspective is different than mine, that's okay. I just want to reassure you.
Oh, yeah. Yeah. I think that, I think we're definitely in a time where there's less space for errors. I think that a couple years ago, you could make significant mistakes and not turn out all that bad. So what I'm seeing is not that we should take a pause. It's not that it's a better time yet, or I just think it's impossible because there's so many different markets. There's so many different deals. You might come across a mom and pop scenario where they've been doing it for 35 years and are ready to hang up the curtains, or that's the wrong metaphor. Anyway, hang it up.
We know what you're saying.
Yeah. So I think that what you have to understand as a as any kind of investor, is there is less room for errors. So it means those 3 E's mean so much more right now. You have to be a little bit more educated than you were maybe a couple of years ago. You have to have a little more experience or work with people who have a little bit more experience than maybe a couple of years ago. And that entourage just has to be a little bit better than it needed to be a couple of years ago. So I don't think it's time to stop. I just think it's a time to be more thoughtful in what you're doing and take a little bit of extra time to make sure the deal that you're getting involved in is really going to serve you the way you think it is, because the cap rates are, lower, all the stuff, all the numbersy things, are just tighter.
I love it. I think a good deal is a good deal is a good deal. Like, it's always about, you have the right people, and is it a good deal? Because there were a lot of deals that were going around over the last few years that really weren't good deals. And there were capital calls being made and all sorts of things. Right. So it all depends, going back to the people. Go to the people. There's
always good deals. There's always bad deals. Just right now, lending is harder. You're going to have a higher interest rate. So there's some things that are just tougher than they were in the past. And you just have to understand that a little bit better.
That's awesome. So as you are looking forward over the next couple of years, what are you looking to invest in passively?
I'm sticking with multifamily for the most part, although I'm open to, triple net is very interesting to me. There's a lot more funds going on. There's a lot more syndication going on over there. In that world, I'm invested in a little self-storage deal. So multifamily makes the most sense to me, and the numbers make the most sense to me. So it's the most accessible and I have the most experience, right? But I'm open to other things. Even oil and gas is our friend Billy Keels has just some really interesting things going on over in that space. That wasn't a very clear answer because I'm open. I'm exposed to a lot of stuff, and as long as a deal makes sense, it's like you said, especially in times like this, a deal making sense almost matters more than the asset class that you're in when you're talking about it.
I appreciate that answer very much, and it's interesting. I find that oftentimes passive investors enter passive investing through multifamily. So specifically, they get into commercial investing through multifamily. And from there, this works. Wow, this doesn't just work. This is extraordinary. And wait, but look, over here in commercial real estate, there's also this. And so it's almost like that gateway into other asset classes.
Yeah, because it just makes sense. And there's a lot more people out there on social media talking about it and things of that nature. Commercial real estate, besides multifamily, has just a different aura to it. It's sort of like a church where you go to church in ties instead of a church where you go in shorts and in board shorts and a t-shirt. There's nothing wrong with one or the other. They're just different approaches to the same thing. One just feels a little maybe less accessible than the other. Again, a metaphor that maybe just falls flat. I don't know.
That totally makes sense. I'm resonating with that metaphor very much. So yeah, I love it. Jeremy, I appreciate you as a friend. I appreciate you as being one of the top insurance providers within commercial real estate. And I really value the time that you've taken to share with the conscious investor community today. So thank you.
Oh, Julie, it's my pleasure. I love talking with you. I love sharing insight with this community. And I just think it's a wonderful place to be for folks of all different backgrounds, all different scenarios. It's another thing I just love about it. I meet so many different people in the commercial real estate world. So thanks for letting me share a little bit of your time and the time of your listeners.
I love it. Thank you. Okay. I'm going to point out that I have a window in front of this screen. And my daughter, UPS just drove by. My daughter's coming to the window doing something. So I'm like, I don't know if that's going to be obvious if someone's watching this on YouTube or they watched it if I was distracted for a brief moment. That's why.
Your kid's at the window.
This is real life. UPS, dogs barking in the yard and kids coming to the window. I love it.
Yeah,
Jeremy, best ways, if someone's listening and they are an active investor and for some wild reason they don't know anything about Shine Insurance, or people are just like, you know what, I want to connect up with Jeremy because it sounds like he knows a lot of people and I'm a passive investor and maybe I should talk with him. What's the best way for people to connect with you?
I love that. Shineinsurance.com is where everything is. We have a multifamily ballpark where you can go and answer 9 yes or no questions and get a insurance ballpark to use to pencil your deal just right off from there. You can find that at shineinsurance.com/ballpark. A lot of people are using that in their front end penciling and it's really working well. So those are the places you can find me.
I did not know about the ballpark and literally was just going to ask you because of some of the things that I'm underwriting right now. So this is fantastic.
You can always ask me. You can always send me a text. Lots of people text me and ask for ballparks, but that's another place to go get it.
That is fantastic. Jeremy, thank you so much for your time. Thanks for your friendship. And conscious investors, you are amazing. Remember, as always, adventure belongs on the trail, not in your investing and your financial investing and not in your personal development. So if you are looking for a place to grow your portfolio, please make sure you reach out. Go to 3keysinvestments.com and fill out the investor questionnaire. Let's get this ball rolling because it's not a commitment. It's an opportunity. It opens the door to opportunity. And if you're looking for that personal development, remember, I am a high performance coach. I support people and I love every moment of that. So in any capacity that you need help financially, personally, please reach out and schedule time for us to get connected up. And until next time, live big, love bigger. What's the big deal about investing in apartments? Why is it better than investing in a slew of single family homes? I've compiled a lot of information on why investing in a multifamily, also known as apartments, will help you reach your investment goals. Head over to 3keysinvestments.com and download the Why Invest in Multifamily guide today.